Welcome, gang. What's good? Interesting week, ladies and gentlemen, to say the least. What do we know? Well, trade tensions. Again, we've got ourselves a little bit of a problem. Trump and China are back to back with each other. China's been accused of course, not sticking to the plan, violating its terms of agreement. China's saying the same thing about the US. So when there's tensions between China and the US, investors get a little bit concerned. Now the Eurozone's coming into play, already putting out the idea that they've got countermeasures ready just in case there are breakdown in the talks. But what are we talking about today? Well, ladies and gentlemen, safe havens. That's the story right now. And this is really important because it's going to help you understand whether or not risk is coming into the market or risk has been taken off. As you've probably seen, that gold is starting to make a bit of a move to the upside. The euro's got a bit of a move to the upside. Why? My days, you know what? I've had such a bad chest over the weekend. At any moment, I could go into a coughing fit. So I am going to keep this live short and sweet for you all. But the takeaway from today is this, ladies and gentlemen, is now a time to start getting a little bit concerned about things. Because the clarity between what's going on with tariffs, it's not there. All we're hearing from Donald Trump and the gang is, of course, there's deals coming in left, right, and center. But the deals that we need to be paying attention to are the ones with the Eurozone and the ones with China. Quite frankly, emerging market deals in the sense of India, Brazil, and all the rest of the gang, I'm not fussed about those, and I don't think investors are concerned about it. We need to know where we stand with the euro, and we need to know where we stand with the Chinese. The reason being because those are the three, or should I say, the two trade routes where most of the movement in terms of consumers, it's all happening between China, Euro, and the US. Of course, the US is the largest consumer in the world. So they get all their stuff from China, and Euro gets all their stuff from China. But you see, China and the Euro, they're kind of good friends, given China's been saying you should be buying stocks in the Eurozone. So we're going to break it all down to help you understand where is money moving right now. And that's going to help you understand whether or not Bitcoin's going to keep on moving up or not. So if you are new, welcome to Traders Reality, ladies and gentlemen. Let's get with this program and work it out because it is absolutely a mad, mad show. These markets is what a time to be alive, guys. I'm telling you, it's an absolute wild time to be alive in this financial space. So let's get with the program. Here we go. So you've probably seen titles like stocks fall and trade tensions, and that's what's going on. Now, how do you identify if there is such a thing as trade tensions? How do you switch on your charts and look at your screens and be like, okay, how can I identify that there is a problem right now in the marketplace? Well, gold. I mean, gold's starting to make its move and it's getting edgy, man. It's getting closer towards its all-time high. Not quite there yet, but when you understand why gold moves up, it helps you understand what investors are doing. Now, what we've been talking about overall is the idea that hedge fund managers have been effectively building positions to prepare themselves for the next tradable event. Now, when I say tradable event, I'm talking about what is actually going on right now in the world. Ukraine and Russia, those tensions are going up right now. Even though you've got ministers going to meet with Russia and what have you, investors are like, it's still a problem. I mean, Ukraine sent out 500 drones over to Russia. So these peace talks that Trump's been talking about, they're being evaded, man. They're not actually being put to work. And there's still the stubbornness between Russia and Ukraine. Russia, in my opinion, is sort of being a bit lenient and saying, you know what, yeah, we're happy to do business with you, but we need to make sure that everything is set in stone. So already investors are like, we've got ourselves a bit of a war, which probably the US is going to get involved. And if the US does get involved, Trump's going to go in and be like, listen, you either stop or X, Y, and Z is going to happen. I mean, it's unlikely that Trump's going to be putting sanctions on Ukraine, but he's running sanctions on Russia. But Russia's been operating this war whilst having sanctions. So those sanctions aren't really going to be a problem for Russia. With that being said, gold's price right now, it is getting a bit of a movement to the upside, and investors are somewhat concerned because they're not liking the story of the actual tensions over Ukraine and Russia. Not just that. You've also got the tensions with regards to the US and China. It says here that uncertainty prompted by President Donald Trump's trade agenda picked up after China and the US accused each other of violating a trade deal that concluded last month. Well, we're getting very close towards the deadline with regards to that. And the Eurozone itself is coming out saying that we are going to prepare ourselves for countermeasures against Trump and his tariffs. Now, you may have heard that Trump has put a 50% tariff on steel and aluminium. Well, you know what that's going to do to stocks in the steel space and, of course, aluminium. It's going to be a problem. And investors don't know how to navigate the markets in the sense where can I generate yield? Which then brings us over to this story over here. Fundamentally, market participants or hedge fund managers, all they care about is yield. Now, whatever's going on from a macroeconomic perspective, you've got to say to yourself as a hedge fund manager, well, it doesn't matter if we've got a war. It doesn't matter if we've got trade tensions. It doesn't matter if we've got high interest rate. Well, it does a little bit, but it doesn't matter what's going over there. Where can I move my money to effectively get yield? Right now, the yields are showing 10.78% on the euro, 23.34% on the yen. What are those two currency pairs about? Safe havens. And that's the problem that we've got. As long as investors keep on going to safe havens because they're concerned about things, your conventional assets like your Bitcoin and your NASDAQ, they're not going to be deemed as, should I say, worth getting involved in because investors are going elsewhere to protect themselves because the dollar's purchasing power is absolutely dog. But then when you say that, hold on a second, if the euro goes up and the yen goes up and the dollar's going down, fundamentally, shouldn't Bitcoin be going up? That's the principle, yeah? Well, let's just go over and have a look at Bitcoin for a second. Bitcoin right now is not trading too very well, but what you've got to consider is Bitcoin has done a nice little rally to the upside. And it may be that Bitcoin has been front run to the upside, cleared out all the liquidity, and now investors are going to start taking their profits, and Bitcoin in principle should be working its way back down again. Now, just to put it into perspective for the holders of Bitcoin, you're looking at the charts thinking, okay, where's Bitcoin at? Well, Bitcoin, since it's broken the 5 and 13 EMA, which is this red line and this yellow line right here, we've had ourselves a little bit of a predicament in the sense where where's Bitcoin going to end up going? I mean, you've heard about this dude, James Wynn, like he's not stopping. He said he was going to step away from it all. And now he's opened another $100 million leverage position. This guy is blowing money left, right, and center. And everyone's like following this dude. I mean, if you go down, it says here that all transactions that are happening on various platforms, you got Hyperliquid, 364 million in terms of daily transactions. You got BNB Chain and Base, Solana. So it's all happening over there on Hyperliquid. But it says here, the risky trader James Wynn opened another 40x leverage long on Bitcoin just hours after claiming he would hit a pause with perpetual DEX trading. The position's liquidation price was at a high risk with over $1 million in unrealized losses occurring in under an hour. In under an hour. Where is this guy's risk management? It's just stupid. What is he doing now? There is speculation that maybe this guy has received a ton of money from the exchanges. He's just putting it together. Because when you think about it, if you look at what's going on that exchange, 364 million transactions, just to get a dude to stand up and be like, hey, I'm going long on Bitcoin, it just naturally leads people to go over to there. I mean, look, 364 million, that is a lot of chain activity, or should I say lots of trading activity that Hyperliquid are effectively earning cash from. So it might not be the case, but it's just me speculating overall. But the guy is getting very, very brave with his position. I mean, if you look now, I don't know where he is right now with it all, but let me just zoom in and show you. You can see here, like he's gone in at amount 944.93 Bitcoin, entry at 105,890. And of course, his liquidation is at 104,150. Well, let's just break that down. Unless he's closed the position. He got liquidated again. Has he been liquidated again? God's sake, man, this guy. Wait a second. Yeah, he's been liquidated. He's been wiped. Unless he's... Oh, well, unfortunately, that's what happens, ladies and gentlemen. So he's providing beautiful liquidity to those who are now closing off positions or, you know, just it's sad when you think about it, man. It is actually sad. But with that being said, listen to this. It says here, nothing stops this train. US fiscal deficits drive Bitcoin's case as a hedge. Now, is Bitcoin behaving as a hedge? Now, according to the article, this woman was saying, says Lynn Alden, she's saying that she compares the US economy to a Ponzi structure that cannot tolerate deleveraging without a systematic collapse. Are we actually going through that systematic collapse? You've heard me say before, Bitcoin needs to experience a traumatic event in the financial markets to suggest the idea that investors can just go over and pick up Bitcoin. Now, hear me out with what I'm going to say here. Upon that actual event happening, okay, what do you think's going to happen? I mean, 90% of retail is going to go and do what? It's going to look at the exchanges that they work with, whether it's Binance, whether it's Bybit or Crypto.com or Coinbase. And if it all goes to pan, everyone's going to rush over to Bitcoin. But do you think that these exchanges would effectively stop people from purchasing it or put limits in place where they're like, we don't want to have hundreds and thousands of retail traders buying small amounts of Bitcoin. We want to encourage all the top dogs to come over and buy it. So a minimum purchase of 10 Bitcoin is required. Naturally, that's going to flood everyone in the institutional space to go and buy the Bitcoin. But unfortunately, they can't buy the Bitcoin because as institutional investors, they're not allowed to do so. Authorized participants, you get all of that in terms of the banks. So where do they go? They'll go over to the ETF and they will swipe up all your Bitcoin. Then you'll have an exchange where there's this story about all the supply is just leaving all the exchanges because they're going to feed it over there to the boys in the ETF. Well, you don't think BlackRock's going to knock on Crypto.com's door or Coinbase's door and say how much Bitcoin you got left? Because remember, Coinbase supplies institutional investors. So, I'm just speculating here because in this day and age, anything can happen. But if Bitcoin were to experience that, would it behave as a hedge? Well, you got to understand, Bitcoin's going down right now. And this is what I've been saying about cryptocurrency overall. Should I say Bitcoin? The problem that we've got is institutional investors and everybody that plays the markets. When it comes to seeking yield, like in the euro, like in the yen, it's all idea. It's the logic. It's the experience of the legacy markets. When everything's going to the pan, they're going to take their money out of the stock market. NASDAQ pulling back. They're going to go over to the bonds market and say, you know what? Is it worth taking that risk right now? Where are we in terms of the deficit? Where are we in terms of interest rates? Well, the interest rate story itself is still pretty interesting. We are expecting that Jerome Powell today is going to be speaking, and he's going to be speaking at 6 p.m. UK time, which is roughly around 1 p.m. Eastern Standard. And the current stance is it's gone to 95.3%. It was originally at 97.4%. So some people are scaling into what could be another interest rate cut, but they are saying that they want to see the interest rates getting cut in September. But today we're going to get some data, ISM manufacturing data. If that comes in as an expansion, 49.3 compared to 48.7, which is what they've got right now, then the idea is that the US economy is doing good. But look at your week. Look what we're going into. Non-farm payrolls, ADP, ISM, it's all happening this week without forgetting our good old orange man who's going to be having a conversation at some point. Today's having another meeting, or should I say he's having lunch with the vice president, and he's going to be in town, call time at 9 a.m., whatever. But of course, that does open us to the potential for Trump to just start throwing madness in terms of on Truth Social when he's talking about trade deals and what have you. So going back into it, if the idea that investors are not going to be going into the bonds market, they're going elsewhere, why aren't they going into Bitcoin? Like I said, they haven't, people in the financial markets, they have not yet adjusted properly to the idea of seeing Bitcoin as a hedge. They see it as a risk. Speaking of risk, let's have a look at where we are in terms of the ETF and understand the balances. It's just going up. It keeps on hitting highs. There's 665,000 in the ETF BlackRock balance, and they've sold quite a bit. Okay, that's not good. Okay, so 2 hours ago, 3, 6, 9, 1, 2, 3, 4, 5, 6, 7, 8, 9-ish, 10. Okay, 3,200, 3,500. Okay, so 3,500 Bitcoin has left BlackRock ETF, gone to Coinbase Prime Deposit. So, okay, so we're going down to 6,602-ish. So it's not too concerned about that, but you've got to appreciate the volatility that's coming into play with Bitcoin. And when we look at Bitcoin right now, you can see, of course, we've got a bit of a problem. It's trading at the lows. It's been a very interesting weekend, to say the least. We are heading towards, we're just broken the 104,000, going into the order flow of Bitcoin. Just to put it into perspective, this is the 12-hour chart, and you can see over the last 12 hours, we've had quite an interesting amount of bids coming into play. Only one real big amount was the 20 million, 20 million at 103,010. We go down, we got another 10 million at 102,560. And then, of course, we go even lower than that. We got another 16 million at 102,589. So just to put it into perspective, most guys with the altcoins are looking at that thinking, okay, now's the time to start buying the Bitcoin. Buying altcoins. I mean, the problem that you've got, guys, is it's being driven by macroeconomics. This is the problem that we've got. Now, if you're witnessing the NASDAQ making a move to the downside, and the idea that trade tensions between the US and China are still going to be lingering, and then we're going to throw in a little bit of a problem with the euro, fundamentally, the euro is still going to succeed because we've still got good rates on the euro. And the idea is that if investors are going into safe havens, Bitcoin is not deemed as a safe haven just yet. It's not. Look at what Bitcoin was doing, okay? Look at what Bitcoin was doing at the time when gold was consolidating. Bitcoin was making a move up, okay? It took its all-time high. And we go over to gold's price action, you can see that gold, in that time that Bitcoin was making its move, gold was making its accumulation. So you can see already that investors are preparing themselves for a hedgeable event. Now, Goldman Sachs does have the price target of 4,500. And I think that if the bonds market does actually collapse, which I do expect it to collapse, Druckenmiller is still short on those bonds, okay? And even Dimon last week saying that there's a crack in the bonds market. It's clear as day a crack in the bonds market. Your 2-year yields are trading 0.7% up for the day. You've got the 5-year coming in at 0.96, the 10-year at 1%, and that's trading at 4.44%. And then, of course, the 30 years coming in just below at 0.97%. The volatility index still trading at 20, which tells me there's complacency in the actual volatility index. But when you think about it, there was a time when the VIX itself was not representing where investors' heads was at. It wasn't. Which means that if you look at the volatility index, you could say to yourself, okay, are we still good? Well, look at where we are. We've had such a significant move to the upside on the NASDAQ, okay? And it looks like everything's all good from that perspective. We go over to smart money, dumb money. You can see straight away that smart money blue line is coming down. And when that goes down, price of assets appreciate. Why? Because they're effectively selling as prices are going up. But when the smart money blue line is going up, assets go down. Maybe we're at a peak point with dumb money, because dumb money right now is very complacent. They're like, it's all good, ladies and gentlemen. It's okay. All right. But when you start to see the the euro, and then you start to see the yen, dollar yen's taking a smack to the downside. And when you start seeing the Japanese yen, when those assets are appreciating, it's telling you, and gold, it's telling you that there is a problem right now. And if investors are concerned, they'll be going over to the bonds market. And because of this US deficit problem that we've got, they're not even trusting the US bonds, which naturally is going to force the yields of the US dollar to keep on going up. Now, if Jerome today turns around and says that we're still going to keep things as they are, because in the actual meeting today, he's going to be going over to, he's due to deliver opening remarks at the Federal Reserve Board of Governors International Finance Division 75th Anniversary Conference in Washington. All right, cool. Euros just took a slump. Well, whatever he's going to be talking about in this situation, right? Investors have already priced it in. Okay, we know that they're going to keep things as they are. And especially when you've got a week like this, JOLTS job openings report, ADP, ISM, and I will say this to all of you that are waiting for this information. Out of the two, JOLTS job openings and ADP, there's not really that much weight to those, even though they are high news impact. They are not going to really make investors think, okay, this is where we are in regards to the interest rates. It's non-farm payrolls on the Friday, which is on the first Friday of every new month. And then, of course, the unemployment rate. So here's the hypothetical scenario. If we get the JOLTS job openings and the ADP non-farm coming in, showing that there is a good thing happening in the labor market and job opportunities are being given, we're not going to get no interest rate cuts. Simple as. And that, of course, causes pressure on the financial markets because it's like, well, if Trump wants to do these tax cuts, that's just going to inflate the deficit. And then our inflation is going to go up again. Now, someone asked a very important question about the fact that the Bank of Japan are in this massive debt on, here we go. Farman has just asked it. It says, what's your take on the Bank of Japan's record 198 billion in unrealized bond losses this year? Do you think rising yields could force a shift in Bank of Japan policy sooner than expected? Look, you've got to understand, Bank of Japan will not move unless their short-term interest rate is at 2% target. It's right now minus 0.1, okay? They're not going to move just yet. And the fact is that investors are going into the Japanese yen to lock in yields, okay? This is where their yields are right now. So in essence, why should they do anything about their interest rates when the money's coming in? Okay, remember, when they increase interest rates, what happens is investors are like, oh, look at that over there. The yield is high over there. I'm going to go over there and pick up some yield because they're offering higher rates of return. But when you go over to the Japanese yen, you can see the yield itself right now is at 1.5%, okay? The 10-year bond is not really doing too much. Now, maybe based on what you're saying in terms of their losses, that is reflective of the Japanese bond market, because if they're not going into the Japanese bonds, it means they're just sitting in the yield of holding yen. It pays them to hold yen as a cash position, as a safe haven, rather than going over into the dollar dominance, which is what you can see right now has taken a bleed to the downside overall, but it's losing its purchasing power, which is why gold is making a move to the upside, okay? Now, gold is moving up because of one of two things. Firstly, safe haven story, tensions overseas, tariffs. But the next reason why gold is going to move up is if Jerome Powell gives us any inclination that the interest rates are going to get cut before September, because that's the expectation. You go over to the rates themselves and you can see over here in July, well, right now it's 95.3. Going into July, you've got 75.6, and those are going to be held at 4.25, 4.5%. And then going into September, you can see that's where it starts to change, where most investors are betting on the idea that they're going to cut it down to 4 to 4.25%. The market is looking for a big rate cut. If they're going to get a 25 basis point rate cut, that's not going to cut it for me. Sorry. They need a big rate cut. And I think that the Federal Reserve is waiting so that it can get to a point where it can do a big rate cut. But you've also got this political influence. Trump's telling Jerome, look, man, cut the rates. And Jerome's still holding it down and saying, listen, I'm not going to do anything that's going to be politically motivated. And I think that's what's going to create the crack in the bonds market based on what Dimmons said, because investors are not going into dollars. They're not going into US bonds. They're either going to try and take on short-term risk with the NASDAQ and the S&P, and or they're just going to run over to the euro, run over to the actual yen and plant their money over there. Look, tomorrow the euro is going to cut its interest rates again. So what does that mean? Well, it means I can borrow more euros and put that euro to work. I can go and buy European stock. It's cheap to borrow money. So the longer that the US delays cutting its interest rates, and naturally when you get a rate cut, you force investors to quickly go and get yields locked in. Let me explain to you. So when you get the 10-year yield market, look at the 2-year yield, okay? Right now, it's just trading sideways in terms of a range, and it's currently at 3.922%. If the expectation is that they're going to cut interest rates, what's going to happen? Well, naturally, that yield is going to come down because they're reducing the interest rates. So why would it go down? Is because investors are like, they're cutting the rates. We need to lock in high yields right now. So let's get involved. That naturally then brings the yields lower. Bond investors going into the 10-year, into the 2-year, into the 5-year, so that they can lock in the yields here because the Fed's going to cut the rates in the future. So it means they're going to be earning less money holding US debt. But the problem we've got right now is investors are fluctuating in the sense, well, why am I going to go over to the bonds market? They're going to keep the rates as they are. They're not giving us a prospect of potentially cutting the rates. They could even increase the rates if there's a problem with inflation. I'll tell you what, I'm going to go elsewhere. I'm going to go over to the euro. I'm going to go over to the yen because the interest rates on the euro are 2.4%. They're going to cut them again to bring it right back down. It's going to be cheap for me to put money to work. I get my euros and then I'll go over and buy myself some European stock. Hell, I might even go and buy myself some some Japanese stock because it's 0.5, less than 0.5% on the interest rates over there. So what you've got to understand is, why is the NASDAQ not moving up? Why isn't Bitcoin moving up? Well, those are two high-risk assets, and investors need to start locking in yields. And the only thing that's encouraging investors to go into locking yields, that means, are they going to use the US yields or are they going to use the European yields, is the cost of doing business. That means the euro itself is cheap to do business with. They are now going to have their trade story with Donald Trump, okay? But remember, China and euro are still good. So there's no real problem over there. It's just the US. So naturally, investors are thinking with the euro, you know what? We don't care about your trade wars and your tariffs, okay? We know that most of the participants in the US are going over to euro, and they're going into their bonds, they're going into their stocks, and they're coming out of your US market. So you try and screw us in terms of trade, your own people are actually coming over to us and buying our stock because our interest rates are much cheaper than yours. So when you understand that logic, you can then say, okay, that explains why gold's going up against the US dollar, because dollar is losing its purchasing power. Gold is going up, safe haven in terms of trade tensions, safe haven in terms of the war, safe haven in the expectation that interest rates are going to get cut. So today, if Jerome Powell says we're going to cut rates, gold is going to fly, because that's what happens. Gold is inversely to the interest rates. As the US deficit keeps on going up, so does gold's price. So you're going to beg for Donald Trump to cut the taxes. And if you're a gold trader, you're going to want him to cut taxes and cut as many of them as possible, because it increases the US deficit. And on top of that, gold's price will fly up. It will fly. And that's the story right there. Capiche? What we got here? Any questions, ladies and gentlemen? Other than that, yeah, I've answered your Japanese question. Well, whilst we're at it, how many of you like the stream? Let's get with that flavor. Come on, let's get with that flavor. All right, couple of questions, and then I'm going to leave you to it, ladies and gentlemen, because the market is now open. Tino, is there any truth to the rumor that Powell is going to resign? He's not resigning. I think he's going to sit through his full term. Technically, he doesn't. He's got to do his full term, which I think expires in about, I think it's in less than a year or 2 years, something like that. Tino, what do you think about, suppose, $7 trillion sitting on the sidelines waiting for buying opportunity? You're making reference to the money markets. Yeah. Problem is the longer people sit in money markets for, the less conviction that we're going to have from the marketplace about everything going up. Look, the things that are stopping the market from going higher is because trade war, tariffs, and of course, the instability of the marketplace itself. 1 minute, you're just sat there happily trading. Next minute, someone says something, it drops. So here are your speakers that you got to be mindful of, okay? Hassett, okay? You got to listen to when he's talking. Obviously, Donald Trump, then Besson, then Levette. So these four people, okay, with the exception of Donald Trump, he's always going to be talking anyway. But the other three guys, you got to listen to what they're talking about, because they are revealing the policies that Trump's trying to enforce. So when Besson said back in the day, don't worry, we've increased the debt ceiling and we don't have to worry about it for another 2 years. And then along the line, Trump's like, let's cut the taxes. And everyone's complaining about the US deficit. Well, they've just effectively increased the debt ceiling, so they haven't got to worry about any deficit, do they? And Besson even said, doesn't matter at the fact that the Moody's have downgraded the US credit rating. We don't care. Look at the value that's going up in the euro. Look where money's going. And I think it's going to get to a point where the administration is going to be like, okay, we've cracked the market. We really have. Turn the printers on. That's it. All the debt that the US owes is in dollars. Whoever they owe it to, they'll be like, shut up, man. Your debt is in our currency. Chill out. We'll get it to you when we need to. That's why everything's going up. NQ is flying. Let's have a look. NASDAQ is flying. Ooh. Okay. So what's going on? Hold on a second. Hold on. Why is NQ flying so much? Tino, I trade crypto using vector candles, levels, imbalances. I don't see any news or social media, but I have high win rate. How is this possible? Well, you're paying yourself. Congratulations. If you don't use news or media, it just means that you're just working through the system. That's good. Now, if anyone hasn't downloaded the system, just go to the Traders Reality website, just click the home page, and you'll get access to the hybrid system. And it just shows you a couple of videos on how to download it. There's a PDF right there, really good for anybody that is completely new to the hybrid system. And you've got the indicator videos down here where you just click them and it takes you straight over to TradingView. Okay. What's NQ 1 minute? Look, this is just the market opening. It's not nice. It's a nice front run. There's no real news per se coming out. Let's just quickly just do this for the market open. Let's have a look what Bloomberg is going to be saying to us. Big money managers, double line, PIMCO. Yeah, I'm not interested in that. Stock bonds, dollar fall, trade risks flare up. JP Morgan strategists warn US stock rally at risk from stagflation. Okay, stagflation yet again. Quickly going. Yeah, this is standard, profit taking. Of course, they've been running it all up. Let's just quickly have a look at the let's have a look at the bonds market just for a split second. Hold on. Yeah, so the 10-year bond is starting to move up ever so slightly. 10-year treasury is still the same thing. Let's have a look at NVIDIA. NVIDIA is just trading positive for the morning. No gap up in NVIDIA. That's pretty much fine. So it looks pretty decent to say the least. But again, just be mindful because we've got power and ISM data coming out very shortly. And if they want to get out of risk right now, they're going to sell as much of it as they can, which is what's fueling this move higher. Remember, if the manufacturing PMI comes in and it shows that things are good for the US economy, we have no reason to cut our rates. There isn't any reason, because that's the whole reason why interest rates are going to be reduced. Because if the economy is starting to struggle, then we need to release capital. We need to release liquidity. And we do that by decreasing interest rates. If the ISM comes out and shows a positive expectation, then everything's all good. And Jerome and the gang are just pretty satisfied with their idea of keeping interest rates high. Capiche? There we go. Nice little movement on Bitcoin. Tino, is it worth playing it safe and taking some profits on Bitcoin ETFs and SPF ETFs, waiting for a drop and rebuying? I'm a long investor, not doing any active trading. In my opinion, ladies and gentlemen, the money markets themselves, they're being packed with liquidity right now. And the only reason is because investors don't have a clue on where to put money. Okay. So when we look at it, we say to ourselves, okay, what's going on with this? Why isn't this working right now? Why isn't my stuff working? Oh, what the hell? I don't even know what's going on there. Look, man, when it comes to investments and long-term investments, you just have to really pay attention to what investors are doing overall with yield. And just like, for example, the best way for me to explain it to you is, if the money's still in the ETFs, okay, it's more than likely going to stay in the ETFs, because as long as you've got the story of Trump and trade, investors are going to keep their money over there. That's one thing. When we know where we are with tariffs, that's when that money is going to release. So money out of in terms of the interest rates, when we start seeing the interest rates getting cut, you're probably going to start seeing assets depreciate, okay, because they're going to want to buy up as much of it as possible in preparation for a rally to the upside. Okay, ETFs will stay where they are, and they will always stay there because people are concerned about things. So when we start seeing the balances of the ETFs coming off, then okay, we can then adjust that and say, right, if they're taking it out of ETFs, where else are they going to go? Well, if they start going into the bonds, that's no good. We want them to go into the bonds and the stock market. If you start seeing the stock market pulling back and the ETFs still where they are, okay, and you're not really getting the feel that the ETF market is going anywhere, because it does go sideways, that ETF market. It really does. It's a very slow moving practice, and that's why there's so much money over there. When we see them taking that money out, then we can start putting our money back into risk on assets, and you'll see it. Everything will pump, okay? But to answer your question about should I take some profits on Bitcoin, well, why has, what the, oh, there we go. There we go. What's this? BlackRock are getting rid of the ETF. So people are selling. They're moving it to Coinbase Deposit. So there's nothing wrong in taking profits. But if you are in fear that you're going to miss out on a big move to the upside, look, you got your all-time high again. Okay. Now let's just start buying some more Bitcoin on the way down in preparation for the next move up. Doesn't mean it's going to go to the pan. Doesn't mean Bitcoin's going to go all the way down to like 51,000. I mean, if it goes down to 50,000, ladies and gentlemen, it's still an expensive Bitcoin, but it's a little bit of a shock given that it's just given back all of this and some. Be active in taking profits, ladies and gentlemen. Your Bitcoin's not going anywhere. Just be active in paying yourselves. Take some. And then when you take some, prepare yourself for the next bet. That's all you need to do. Don't hold on to the idea that Bitcoin is going to keep on soaring to the upside unless you are operating on this candlestick right here, which is the monthly time frame. This is a 12-month candle. Each of these is 12 months. If you're just looking at this, you've got 6 more months to work out whether you should buy Bitcoin or not. Okay? If you make a move on every single candle. So for the last 6 months, Bitcoin's been trading positive. It's come away from the lows and moved away from it. That could lead us to believe Bitcoin could be going higher. But it will always go down and up. And you just got to pick your spots. Take some and then prepare to put it back in again. You know, it's... And I've heard people say that, you know, when you say, you know, no one went broke taking a profit. I understand why some traders are like, hold on a second, then how are you going to maximize most money or most returns if you're taking it off all the time? But the retail trader doesn't think like that. The retail trader thinks, oh, well, I've got money, I'm going to keep it in there. Yeah, you've got the mentality of, you know, making sure that you keep your exposure there and try and maximize as much of the move as possible. But quite frankly, everyone ends up getting shaken out. I mean, if you've got guys like this that are burning liquidity left, right, and center and just being bold with their leverage trading, you're just burning money, man. It's just a waste. Like, all he needs to do, even if he was to scalp, you make 2-3 million in a trade. That's a good day's work, you know? But he obviously is going for the big shot. I mean, 4 or 5 grand move in Bitcoin with a balance like that, and you're using that much capital. You shouldn't, I mean, a shocking liquidation price. That is so dead. That is so bad. The liquidation point is absolutely frightening, to say the least, when you've got that much capital. Why is your liquidation point so close? It's less than $1,000 diff. What the? It's so bad, so bad, so bad, so bad. What, Tina, what do you think about banks' unrealized losses? Listen, man, it's the bank's unrealized losses story. You've got bigger problems than that. You've got the US deficit, which is going to make up most of those bank unrealized losses. You know, in my opinion, that's what I think. Tino, you tell people to take profits and hodl. Do you want people to use the profits as well? The corner street woman now accept Bitcoin, and I was wondering if it was worth spending profits on them. Well, I don't know what kind of question is that, but anyways. Speaking of euro, what is your take on the digital euro rolling out in October 2025, and what do you think the impact will be? I think that the Eurozone is the only currency in the world that can challenge the US dollar. Simple as. Maybe. They've wrote articles about it, and they've said that maybe the world's currency reserve is going to be the euro. Well, when your dollar is getting absolutely violated and no one wants to buy the debt of the US dollar, it's being undermined. Investors are going to be like, okay, we need to do something about it. But because investors can go to other assets like gold, and of course they can go to other assets like the yen, you know, to assume that the digital euro is going to grab anyone's attention, you look at what's going on now in the euro. Okay, look at what's going on in the dollar itself. Investors are not liking the dollar. It's bad news. And maybe all this time that they've been increasing the debt ceiling and printing and printing and printing, per se, our lady over here, where the US economy is a Ponzi scheme. Ugh. When they removed themselves from the standard of gold, that's when the US went to the bin, in my opinion. You know, when you have risk on, are you waiting for target to be hit, or do you sort of trade the momentum? I see traders sit and watch their trades and sit through so much up and down. Swing traders, yes. Scalpers, no. You know, for me, it's when I'm scalping, I'm not interested in targets per se. I'm interested in points of interest in the chart. But look at what's going on in the marketplace, guys. I did this video over the weekend for the Platinum members, and it's the weekly review. And inside of there, I spoke about a strategy on wickless candlesticks. Okay. And it's really benefited a lot of people, and people have been testing it over the weekend and they've been ripping it apart with it. But the basis of that strategy is to act quick. It's a scalping strategy. Okay. You want to get on the scalping because these marketplaces are difficult for holding swing trades. Swing trades may, that take maybe 2-3 days, way too much time and exposure, in my opinion. And even if you're sat in the charts for 1 hour, that 1 hour, someone could say something that will screw you, which is why most of my trading that I'm going to be doing moving forward right now, I'm going to be trading the Asian session. It's so much more calmer, so much more easier on my blood pressure. It's so much easy for my mind to absorb, because when I see price going down in the Asian session, it's probably going to keep on going down. But Trump's going to be asleep. Everyone else in the UK is asleep. No one can say anything stupid. And as long as we've got this war going up with Ukraine and Russia, the markets don't react to war the same way they did before. Okay, so I'm not going to be concerned about that. But in my opinion, I've had to adjust the way I'm trading because the NASDAQ is erratic during the New York session. But when you get into the Asian session, it respects the ranges so well. And the euro and gold as well. Those are really the main assets that I'll be trading during this week. Of course, we've got big data coming out this week, so you're probably going to get a lot of range-worthy behavior. But just take what you can, man. Because I promise you, when these markets regulate, all of you that have been posting, or should I say, been taking trades and wondering, why has it not worked? Why has it not worked? When the market stabilizes and everything calms down, you'll find that you'll do really, really well, because you won't have no madness of anyone commenting, or the sentiment across the board will actually, how can I put it to you? It will level out, because we know where we are with interest rates. We know where we are with inflation. They don't even know if we've got inflation going up or down. It's stubborn. Your GDP's contracted the most since 2002, first time since 2022. Yet you want to keep your interest rates up. You've got a problem with the politics of the interest rates, and then you've got the mathematical story and the economic data of interest rates. Okay? Since when has a president tried to encourage the Federal Reserve to cut rates? They never do that. They keep them separate. You run the country, we run the finances. Okay? Why do you pay for your accountant? You pay your accountant to do your books. You don't want to worry about doing that. You just say, let my accountant deal with it. Well, the Federal Reserve is the accountant for the US. When you start sniffing in on the accountant, you're like, yo, leave me alone. Like, this is what I do, Anyways, Bitcoin taking a little bit of a tumble. I'm paying attention to it right now. That's why I'm staying live a little bit longer, because we have got some significant movement happening right now. Euro's making a little bit of a move to the upside. Tina, what's your take on Chinese president strapping on a drive, forcing his noodle into Trump by raising tariffs by 300%? By the time I read strapping, I thought, I'm just going to read it. And you know what? You guys as well, right? Just to put things into perspective, I went onto my X this morning, all right? And this guy, Bryony, man, you need to stop this, bro. Sorry. You need to stop this. Like, come on, man. That's scary. That is bad. Really bad. Because it looks so real. And I don't know, man. Just internet, do your thing. Wonder what happened to that guy who claimed he was Satoshi Nakamoto. Jesus, man. You guys got to stop it. Oh, Bitcoin. Taking a bit of a tumble. Oh, God. Don't come to me. I look good in army trousers, please. Anything else, ladies and gentlemen? Anything else other than that? I think I'm better leave you guys to it, because Bitcoin is starting to make a little bit of a move to the downside. Let me just run something over. NASDAQ. NASDAQ, you piece of shit. Anyways, quickly go back into Bitcoin. Let's just go over and look at Euro. Euro's coming back up again for the day. We've got gold making its move. There's your safe havens. And when Bitcoin goes down and gold goes up, there's a disconnect. XR, Bitcoin going down again. I can't even finish the word. That's why you should never show your face. Never mind. Anyway. James has already been liquidated. He has been liquidated, yeah. That beard looks good. No, okay, stop it. Right, listen, ladies and gentlemen, have yourself a wonderful day. Hit the like button, subscribe if you want to, but you've got information coming out in the next 10 minutes. The market's going to get a bit chaotic, and watch out for when Powell speaks later on. All right? Take care of yourselves, gang. Mad love and respect. Platinum members, going to get something out to you, but wait till the news comes out very shortly. All right? Take care of yourselves, gang. Peace.